Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Tuesday, April 8th, 2025. This is Nelson John. Let's get started. India's stock markets woke up to a nightmare on Monday, logging their worst single-day fall in 10 months after Donald Trump's tariff shockwaves rattled global investors over the weekend. The Sensex plunged nearly 3%, opening 4,000 points lower. Mid-caps and small caps were hit even harder, down 3.5% and 3.8% respectively. But should investors be worried? Maybe not. A Mint analyst suggests market meltdowns like this often bounce back fast. Some of the best single-day rallies have followed just days after the worst crashes. Monday's correction is more global panic than India-specific. The real concern is inflation and supply chain disruptions if this tariff war escalates, said Abhishek Jaiswal of Finn Avenue. Interestingly, 43% of the worst Sensex crashes have happened on a Monday, proof that Monday blues are in just a mood. Yet amid the global sell-off, India has held up relatively well. While the Nifty is down 5% since April 3rd, it's faring better than Hong Kong, Japan and even the US, reports Mint's Mayur Balerao, Niti Kiran and Abhinava Saha. Even the rupee has stayed largely stable, down just 0.47% compared to steeper falls in other emerging market currencies. So yes, it's rough out there, but maybe, just maybe, this storm could be followed by a silver lining. It's not just stock markets taking a hit. Crude oil is crashing too. Brent crude prices have nosedived, plunging 11% last week alone to $64.62 a barrel, and continues their slide below $63. Now, that's a 4-year low. Just a year ago, oil was at $92 per barrel, down nearly 30% since. What's driving the fall? A perfect storm. On one hand, Trump's tariff threatens to push global economy and even the US into recession, denting demand. On the other, OPEC is boosting output and US oil production is already at its peak. The International Energy Agency now expects oil supply to exceed demands by 1 million barrels a day this year, reports Mint's N. Madhavan. For India, though, this drop is a silver lining. The country imports 85% of its oil, so cheaper crude means a lower import bill, reducing inflation, and potentially a stronger rupee. It could also ease government finances and make room for their interest rate cuts. But don't fill up your tanks just yet. Despite the drop, fuel prices won't fall immediately. The government just hiked excise duty by 2 rupees a litre, soaking up the benefits for now. India's booming exports to the US just hit a roadblock, worth nearly $5.76 billion. A new report by the Global Trade Research Initiative warns that higher tariffs under Donald Trump's America First policy could shrink India's shipments to the US by over 6% in 2025. The hardest hit? Gems and jewellery, electronics, auto parts and seafood. Of the $89.8 billion India exported to the US last year, $67.2 billion worth will now face a steep 26% duty, up from the lower most favoured nation rates. Gold, jewellery and diamonds alone may lose $1.8 billion in value, and electronic exports could fall by $1.78 billion. Marine exports like shrimp and fish, they're down by 20%, reports Mint's Dhirendra Kumar. The average impact might look modest, but the effects is deeply uneven, said GTRI's Ajay Srinivasa. Some sectors may benefit from Chinese goods being penalized more, but others are in trouble. India's government is staying the course with trade negotiations, avoiding tit-for-tat tariffs for now. But the big worry? These duties make Indian goods less competitive against rivals from Mexico, Canada and Vietnam. Pharma and home textiles may escape the storm, but for many exporters, it's going to be a choppy ride ahead. Brace for a bump in your gas bill. LPG prices are going up by 50 rupees starting today, April 8th. Oil Minister Hardeep Singh Puri confirmed the hike at a press conference on Monday. For beneficiaries of the Ujjwala scheme, subsidized cylinders will now cost 550, up from 500 rupees. Others will pay 853 rupees per cylinder, up from 803 rupees. The price hike will be reviewed as we go forward, said Mr. Puri. The Pradhan Mantri Ujjwal Yojana (PMUY) provides subsidized LPG to women from low-income households to promote clean cooking fuel across rural India. As I mentioned earlier, the government has also announced a 2 rupee hike in excise duty on petrol and diesel. But here's the relief. This increase won't hit your pocket. This will not be passed on to the consumer, said Mr. Puri. Clarifying, the move aims to help oil companies recover 43,000 crore rupees in losses from subsidized gas sales. Since international crude prices have dropped, the excise hike will be absorbed without increasing pump prices. So yes, cooking gas just got costlier, but if you're filling up your tanks, you won't feel a pinch, at least for now. India's booming hotel biz may soon have a new player on the bourses. Prestige Hospitality Ventures. The hospitality arm of realty giant Prestige Group is prepping for a public debut, aiming to raise 2,000 to 2,500 crore rupees. Sources tell Mint that the company will file its draft IPO papers with SEBI within 2 weeks. The Bengaluru-based firm owns marquee properties like JW Marriott Prestige Gulfshire and Conrad Bengaluru, and it's just getting started. The IPO proceeds will fund expansion and chip away at debt as Prestige looks to double its hospitality footprint over the next 3 to 4 years. The company currently operates 8 hotels, 1,477 keys, with 4 more under construction and 11 others in the pipeline, including luxury builds in Delhi's Aerocity, Mumbai, Goa, and beyond. Now, here's why it matters. Despite a cooling IPO market overall, hospitality firms are cashing in on India's rising affluence and travel demand. With strong domestic demand and big tie-ups like Marriott in play, Prestige's IPO could unlock serious value if market moods stay on track. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a tremendous Tuesday.